Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to give an update on the overall U.S. market. There's an interesting development. I just wanted to talk about it. This is not a call. This is not a prediction. Um, this is just a suggestive YouTube that will maybe guide you the right direction. So here we go. Let's get into it. So this is the S&P 500. This is a daily chart, goes back to October, not a real long-term chart. But as I was talking about back in February and March about this negative divergence where we've gotten lower highs on our relative strength index while we've gotten higher highs on the S&P 500, and it was flashing a caution sign, beware, a change of trend is coming. And sure enough, we got that downturn in April. And I was suggesting that we would get down most likely to our 30 level on our RSI, which has marked important bottoms previously, or short-term bottoms, not important bottoms. And that's what we got. So now we've had a rally off those lows, and we're really at a significant point here. So the decline pulled all our moving averages together into a moving average convergence, a rainbow convergence. Again, I want to give a shout out to Tom McClellan, who introduced this, at least to me. And, I want to give other people credit for taking the time to discover different tools. And this is one tool I have in my toolbox. And so the rainbow convergence, the moving average convergence all came together a couple of days ago at the low. And at the time, I said two scenarios. Prices could sit here and wait for the moving averages to move down and test the price action. And then that would give us an indication of the next move in prices. So we could have a pause, or we could, which is a type one, or we could have a retracement back to the moving averages, which is a type two convergence. So here we are, type two convergence right up to resistance. And so if prices can't break above 5,100, clearly 5,100 on a daily close. It can't be at 1 in the afternoon. It can't be at 11 in the morning. It's got to be at the close. If it can break clearly above that, then this rally will continue, most likely. If prices cannot, then this moving average convergence promises a new low. So that could be 4,900. It could be, I don't know, 4,500. But it tells us that we're going to go down lower than 49.53, the previous low of a few days ago. So again, this is just kind of a important sticky point on the S&P. The NASDAQ is showing us the same thing. So, I've been selling the last couple of days because we're coming into this convergence. And on some of our holdings, like utilities, which have been going up, and China and other things, every day that they're up, I just touch them and I sell a little bit. I sell a little bit. And so now I'm waiting to see what's going to happen. So that's just a little bit of a backdrop. Now, I am bearish long term on the US market. First of all, some of the things that we have, like utilities, like cannabis, we got stopped out of slightly, even though I will talk about that too. It's just barely below our stop level. And it also has a a moving average convergence. So we'll see what happens on that. But utilities, China, those are things that can go up as the overall market goes down. So they have a low correlation to the S&P 500 or the U.S. stock market. So when I say I'm possibly, I'm short term kind of bearish or neutral or not buying the US stock market, it doesn't mean that's for everything. There are things out there when the charts look good, I will own them. And it's given us the opportunity to outperform the overall market over the last few weeks, over the last month or so, couple months. So this is what I wanted to point out to you. This is on a short-term basis. Again, the decline doesn't have to be a major collapse. It can be a 3% down move in the market, I think is what it comes out to uh, make a lower low than the previous low. Or it can break through and we're off to the races and I'd be buying on that break above. So um, this is a short-term basis, but I do want to point out on a long-term basis, I'm pretty bearish. Uh, so you can see going back to 2018 when we hit this higher high on our RSI, there was some real buying going on, and this was confirming these highs. But since then, all these higher highs, we've been getting much lower highs on our RSI, our relative strength index. This is on a monthly chart. This goes back to 2005. So this is a long-term chart, but this is a huge negative divergence. This is bigger than the negative divergence we saw in 2000. So in the back of my mind, even though I've been suggesting stocks and some that are not highly correlated to the S&P 500, excuse me, and I've been willing to buy things. On a long-term basis, I am a bear. I do think that there's going to be some pretty big pain coming. When that is, it could be a month from now, it could be now, it could be a year from now. This divergence has gone on for 6 years. So I just wanted to point that out. But the reason for the call today was, oops, the reason for the call today was the short-term rainbow bearish convergence that was suggesting, that we're at a sticky point here. So let's see what happens. I'll keep you updated on the short term. And if anything confirms this long-term view, I will be the first to tell you. Again, I don't like talking about the overall market. I'm more interested in finding things that will go up, like, again, utilities like copper, like China, things that have been going up as our market has gone down the last, I don't know, 4 or 5 weeks. Thank you for watching. Please subscribe and like. It would really be helpful. Chart Built Wealth, profitable investing with technical analysis. Thank you and have a great evening.